What happens when the dollar really tanks? That's, if they're not already pre-positioned to that moment, well, good luck. So, look, yeah, I know that's conspiracy, that's conjecture. I get it, but you have to try and start to figure things out. Like, why the hell are they allowed to be so concentrated short? Why are all these things happening that are just counterintuitive?
Get ready for an exciting market update. The silver market has seen its fair share of ups and downs, and in this video, we've got some great news to share. Plus, don't miss the expert insights from none other than Andy Schectman, CEO of Miles Franklin. After a series of tumultuous weeks, silver is finally making a positive comeback, with prices on the upswing. But there's a pressing issue we can't ignore: the ongoing metal liquidation from ETFs. In today's video, we'll delve deep into the latest silver market developments and explore what it will take to reverse this trend. Stay tuned till the end.
You go back and look over the last 3 months, we've lost 692,000 full-time jobs. So part-time has increased by 1.2 million since June, but you're losing for every one new job that you're gaining as a part-time job, you're losing almost one that is full-time. It's not something that should be celebrated for sure. And look, as far as the traders are concerned, that is the truth of it. The truth of it is that we can talk about fundamentals all day long. Yes, and at some point, the supply and demand physical fundamentals will come into play. But I think they'll come into play in a different way than most people think I'm hedging at. And that is that when the commercial banks, I believe, decide it's time to blow up the money managers and really do it in this environment where, according to Ted Butler, we have massive massive shortage rather in available silver on the COMEX platform. And you see, as you mentioned, that we see a big price rise as the commercial banks go long and the managed money have been hoodwinked into going short and to selling their longs to the commercials at subsidized prices. One of these days, and I think this is Ted Butler's contention as well, that the big commercial banks will not short the rising market. And that's really what they've done all of these years, which is counterintuitive, right? You're supposed to short a falling market if you want to pile on and make bigger profits. If you short the rising market, you better have deep pockets or know the playbook or both. And that's what's so unusual about the way the commercial banks short this market. They suck in the speculation. After they go short and lose everything, then they go long. When the prices are low, the commercials take the other side. They let the price rise. And as the price is rising, the commercials start to short the rising price. One of these days, they won't do that. They won't short the rising price, and it will just start to run away, creating a massive short squeeze. I think they're doing whatever they can to take as much metal away from the market before the market realizes what's going on. And this is why they can't let the price go too high, too fast. They cut off their nose to spite their face. They're milking it methodically from the hands of anyone who's dumb enough to sell it at these levels. And, what's the old saying? The market can stay irrational longer than you can stay solvent. I get it. This has been a long overdue time, and there's war and there's inflation. And why would it not? Why? That's all relevant and that's all true until it's not. And I think if you look closely and you see the amount of central bank purchasing, you see the ETF offtakes. We've seen metal backdoored out of SLV and GLD. We've seen it taken off of the COMEX. We've seen it taken off the LBMA. There reaches a point where they have to keep trying to find other solutions. Look, they're doing it off the Shanghai Metal Exchange as well. Record low in silver, if I'm not mistaken, some of the largest offtakes in silver ever recently off the Shanghai Exchange. So they're exhausting every avenue they can to pry metal from the market before it is exposed for its real value, a strategic value, not an industrial value or a monetary value, but a strategic value. You realize it's strategic. You realize that you need it. You realize that you're in military applications and green and digital applications, all these aspirations of green world and whatever, you need the silver and we don't have it. So let's devise a way to get as much as we can. And maybe the US is part of this too. Maybe the US government is hoarding silver and using the commercial banks and their ability to control the price, keep it in a level, to create volatility through levered futures contracts, and to keep it not violating these moving averages. Like when gold just shot up, it just came up to the 200-day and came down. Now, that's technical analysis 101. It was not confirmed they're going to sell that. So the traders aren't going to buy that right now. You play that market if you're a swing trader, but you don't if you're a hedge fund or whatnot. If it's violating, if it's not confirming, you're not going to buy that. So they keep it within range bound within these levels. They violate moving averages. They do things counterintuitively with price in a conspiratorial world where a lot of these things, where there's a very fine line between conspiracy and reality. Whoever is doing this, maybe they're doing it now. It wasn't always this way, but maybe now they're doing it because they realize they're at the 12th hour and they don't have enough silver in our strategic stockpile. So they're finding a way to keep the price at a level that makes everyone quite disinterested and allows them at prices very, very unfair to the producers of the silver, to the holders of silver, and to the real world value of silver, are buying it and stockpiling it as maybe a last ditch chance to do so before it truly expresses itself in dollar prices. Because remember, you look at gold, it's at all-time highs in most of the currencies around the world, not silver yet, but gold is. And what happens when the dollar really tanks? That's, if they're not already pre-positioned to that moment, well, good luck. So look, yeah, I know that's conspiracy, that's conjecture. I get it, but you have to try and start to figure things out. Like, why the hell are they allowed to be so concentrated short? Why are all these things happening that are just counterintuitive? I think that there's a little bit of conspiracy in every bit of reality, or vice versa, or what I'm trying to say, but I don't know. I rest my case. We see prices decline. No one sells. This is all done on paper. And the reality of what's going on in the retail market is completely detached from what goes on COMEX, and it's just detached. The futures market is controlling the price, not the commodity controlling the futures market or controlling the price. It's the tail wagging the dog. And I think, much like many of the things that are growing long in the tooth with the Western system, this will go by the way of the dodo bird. And I think you'll see other exchanges start to pick up the torch and carry the real price of gold and silver in the future. So one of these days, they're going to let it run, and you're going to see price swings like this much, much higher, maybe a couple $100 in gold, maybe $20 in silver. Who knows? But I think this is what it will look like in terms of how fast it will go. But I think it'll be much more in terms of its dollar appreciation.
As we conclude this market update, we've unraveled the exciting developments in the silver market and shed light on the ongoing metal liquidation trend within ETFs. We hope this video has provided you with valuable insights. To stay ahead of the game and stay informed on the silver market's ever-evolving landscape, keep an eye out. If you found this video helpful, don't forget to hit the like button and subscribe to our channel for more exclusive content. Your support keeps us going. Thanks for joining us today, and we look forward to bringing you more in-depth market analysis in the next video. Until then, take care and happy investing.